So, what you're really asking is, when will the money supply change? Because that's really what matters. And sometimes when you're looking at these stocks, what's more important is, what is their ability to capture people's imaginations? That's why quantum rallied, right? That's why all these quantum stocks are up a lot. They're capturing people's imaginations, and there's tons of cash. Tons of cash. No unemployment, so people had money from that. Rising prices on everything, so people had money from that. And so you had companies that are talking about a new kind of computing. Well, you missed the old kind of computing. That was called NVIDIA, parallel computing. You probably missed the first kind of computing, the x86 in the 80s, 90s. You maybe weren't even born yet. So you say, I want the next kind of computing, and that's quantum computing. Okay, great. Whether that's true or not doesn't matter, because you're looking to gamble. You're looking to speculate. And when people take the money away, you can't speculate. There's no money to speculate. You need money for pharmaceuticals. You need money for rent. You need money for surgery. You need money for a rainy day. Maybe it is a rainy day. You need money for a hurricane. It's when it's bad out there, you can't buy stocks. Why? You might say, well, I save money more. No, I'm not talking about you. When in 2008, my partner and I, Marek, were sitting in his attic, studying stocks every day. I was basically unemployed. My hedge fund had not done well. And like I said, I made a big bet that the market would crash in 2007. I was wrong, because it crashed in 2008. And it was too early. So I was licking my wounds, like a cat. Sitting there with Marek, reading Munger, reading Buffett, forming this philosophical framework that would carry me forward. We started trading and betting with the money we did have, but we didn't have money from institutions. We didn't have money from big backers like CalPERS. Our big backers said, or my big backers, I should say, said, you bet on this market crash and you were wrong. You had the right idea, but it didn't work. So that's that. But the funny thing is, every other fund had the same problem. People took money out from Citadel. Citadel was down 50% at that time. My boss, a Tiger Cub, who had done marvelously, he was up all the time. But he wasn't up enough. He had good returns, which was really hard to do in that environment, but he was up, 10% or 12%, stuff like that. And they said, well, we need that money too. This is New York firefighters, New York pension, Port Authority, guys like that. These guys put 10, 20, 30, $40 million in hedge funds. You don't. You might put $1 million in a hedge fund, maybe. So, those guys needed their capital, and they said, give me the capital back. So even a guy like that, who had 2 or 3 billion, now he's got 200 or 300 million, or something like that. I don't know exactly. And Citadel, who had 20 billion. Now he's got 10 or 8 or whatever. And they're looking at stocks and they're saying, wait, we're deep in the black zone. We're deep in the black. We don't need to speculate. We're paying 2, 3, 4, 5 times earnings for this stuff. But the point is, they don't have capital. There's no capital around for people to buy the stocks. Everyone knew they were cheap, but there's nowhere to buy. At the time, I wish I had a couple $100 million I could trade with, where I could go buy Procter & Gamble for 8 times earnings, and J&J for 10 times earnings, and Pfizer I calculated was around 5 times earnings for the base portfolio. Of course, it was a no-brainer. You don't have to be Warren Buffett to see that. But nobody had the capital that they were willing to risk. They were willing to buy treasuries. They weren't really willing to buy stocks. Stocks had just got decimated. We didn't know the future. We didn't know if there was going to be a banking system. So we're in that black zone. And right now, we're sort of still in this orange zone, probably high in that orange zone, in my opinion. We're starting to come down closer to the black area. And having capital is important right now. And avoiding speculation, deep speculation, is also important. And I feel like it's more important sometimes, we were talking about macro earlier, to know, am I buying speculation or am I buying reality? Now, I don't focus on this, right? I focus on what's real and what isn't. Well, the thing is, when things are real, maybe they'll go from the top of the orange to the top of the black. And when things are not real, oops, maybe they'll go from, that's not a good one. Maybe they'll go from the top of the orange to the bottom of the black. So you'll get some separation. But when things are good, the crappy stocks tend to be in favor, right? You want the crappiest stock you can find because the dumbest people are going to speculate on it. And the smart people are not going to basically just get out of the way. They're not going to keep the price honest. And we've seen that, right? We've seen that 100 times with these stocks. Fartcoin is up lately. So if there's money flowing, it'll behave both intelligently. It'll buy good stocks and good companies and fund new ventures and things like that. But it'll also behave irrationally because humans are irrational. And people who missed a boat get FOMO. They get greedy and they want to chase the next thing. So it doesn't mean that, we should sit here and try to take the temperature of the market every day and see if, whether it's going to change. The reason I tell you this long, elaborate story is because our job is just sort of sit here, keep our capital, and just sort of sit here and wait. And if something crosses this boundary, remember, this is the average stock, but this is composed of hundreds of little stocks, like let's say this purple one. This purple one is rising like this. And say over here, when it falls, it's falling into the black territory where we feel comfortable buying it. But up here, we're not so comfortable. We want to sell it. This is the kind of stock that, we'd sit and wait to buy. And if there's something really crazy, it's never reasonable, but that's so out of bounds of normal that it'll probably never be in the black zone value-wise. We maybe try to short that because eventually it's going to come into and have to meet reality. Whether it's going to do that in a good market or a bad market, we don't know or care. Cassava did that, even though we're still in a very frothy market where lots of orange stocks exist. That doesn't mean there's not, price action and price discovery that will, help people realize. For example, we can still have a bull market, but if quantum doesn't put up earnings at some point, people would get sick of it and get tired of it. And in the case of Anavex or Cassava or Galectin or any of the stupid stocks we've looked at over the last year we've been together in biotech, clinical trial will tell you it's over, right? It doesn't matter if you're bull market or bear market. Clinical trial will tell you it's over and, the drug's not worth anything. So, and the black line, the value line is close to zero. So it doesn't even matter where the orange line is. So that's some theory of markets for you, but I feel like, again, the mission is the same. Find the stocks we feel really comfortable buying, find the stocks we feel really comfortable shorting, have that margin be so wide, and ideally over enough stocks that, we don't have to worry about things like timing. We don't have to worry about things like catalysts. We just sit and wait. And time heals all wounds, and that we can take a little bit of, an INQ going to 50. We can survive that. Because a 2% position becoming an 8% position doesn't put us out of business. Does it give us a headache? Yeah. It's annoying losing 6% of your assets. But, we're not going to lose, 90% of our assets. And when we buy something and it drops, is it annoying? Sure. But, if with enough stocks and enough time, we should be able to do well. So in any event, that's kind of some philosophy. Of course, philosophy and practice are two different things, and you're encouraged to do whatever it takes to get returns. Whatever works for you, whatever maximizes your returns, you do it. So we were working on this. If you don't have the time to wait, I'm not sure you should be investing. Buffett said investing is the process by which impatient people give patient people their money. So you need patience. You need time. If you can't wait then I don't know what you're doing. But you should be able to wait. And I guess that's one of the problems in the hedge fund world with monthly performance, is that you need to put up a monthly performance number. The nice thing about investing for yourself or investing for a corporation or investing for, something like that is, your family, for example, is that you can kind of ignore the monthly noise. But even then, you need some performance barometer of some kind, right? And if you have a year or two of bad numbers, you will get eyebrows raised saying, well, what are you doing? But if you have really good methods, maybe you're just going to make a ton of money next year when the bubble collapses or when whatever happens. You still have to be, smart about how you do all this stuff. And again, there's no textbook. The closest thing to a method I have, I'm telling you, but there is no exact textbook. You have to be pretty nimble. And again,